Hello, everybody, and welcome to our first webinar. Please do apologize us. It's the first time, so if something would be lagging or not working properly, we would try to handle it, and I hope next time it will be better. But first of all, I would like to thank you, everybody, for joining us today. Uh, please feel free to write a question, even though, yeah, I found it in the chat. So you're free to ask us any questions. So today we will talk about the stablecoins and how they're changing the environment of the global market, of the fintechs and the Web2 businesses. So today with us are experts from Point Legal. So let me first of all introduce ourselves. So I'm Serge. I'm the co-founder of INXY Payments. So we are, as INXY, building the uh, uh, platform for the businesses, which is helping to facilitate the stable coins and crypto for the pay-ins. We can convert it on the fly to the fiat, settle to the bank accounts. We can help businesses to do the mass payouts in crypto, and we will discuss later on which use cases it could be pretty viable and why it is so important today. And also, of course, we can do the exchange from fiat to crypto, from crypto to fiat, and from stable coins to fiat, and vice versa. So, and today with us are Stanislav and Nastya. So, I would kindly ask you guys to do the short intro on your behalf.
Hello, everyone. My name is Stan. I have a background in corporate finance. I was CFO in SumSub, which is one of the tier one KYC providers. And I think I've been working with stablecoins since 2018 because I was CFO in the largest EMEA sports media. And all betting providers, they used to pay in crypto. So that's why I came across stablecoins so early. I think my role today is to be a sparring partner for Serge and ask, all the tricky questions.
Absolutely. And thank you very much, Stanislav, for that. Nastya?
Hi, I'm Nastya. I'm a legal consultant. As correctly stated, I have over 15 years in consulting, first of all, institutional banks, software developers, and that is all before I almost exclusively changed my route in legal industry to Web3, blockchain, crypto, whichever term suits you better, which happened, I guess, in late 2017, which is not coincidental in my view. I'll talk about it later because this was like sort of a turning point when all of the regulators suddenly saw crypto as something that is not regulated, but has to be regulated. And so it was an interesting journey. I saw the industry through its nursery, and now it's growing up so nicely into its, I guess, teenage years, or maybe even adulthood.
I think it's a perfect time to be in.
That's true. It's almost grown up, in my view.
Yeah. I completely agree here because I see an interesting chart which actually compared the crypto and stable coins with the internet. Internet in the early days and the internet afterwards, because initially internet perceived by many as something very strange and very only crazy people was using it on the very beginning, but later it's becoming more and more popular and adopted. So we see the similarities here with the stable coins and with the crypto. So today we will share with you some really interesting findings, and also we will discuss and dive deeper into the use cases which we already have on our hands, and also we will discuss about the how to use tables, and also about some DeFi life hacks which are not commonly used by regular Web2 users. So I hope it would be useful for you guys. And please do not be afraid of writing down the questions. We will answer you ASAP. So let us begin. So first of all, what we would like to share with you is how fast stablecoins are growing. Actually, this data was released by A16 that crypto just recently on I guess on this or previous week. So it's pretty new. So it basically shows how fast the stablecoins finance growing in the global market. So it actually surpasses 46 trillion dollars. Yes, I see that. Will it be recorded? Yes, absolutely. It will be recorded, so we will share it afterwards. So yes, and the interesting part that the rate of the growth is actually increasing. So we believe that it will be growing even faster, and within the next 3 to 5 years, it become used so frequently as the regular currencies.
Yeah, that's true. It's actually this chart brings me back to my point about 2017 and 2018. You can see like the actual growth that started since 2021, because in the early days of regulation, there were not so much of stable coins in the first place. Like that was not a thing. And bringing this idea back, to understand what a stable coin is from a legal perspective. And so, because we were talking about stable coins, a lot of people associate it with crypto, and crypto sounds scammy. And, in the industry right now, there is a tendency not to use the word crypto in the first place, although MiCA and European regulation use it openly, but it sounds like crypto is something dangerous and it's a scam. We shouldn't be using that. So we usually talk about digital assets or virtual assets. I guess it's like a more proper way to address that. And what is a stable coin? From the perspective of 2017 and 2018, actually, the idea of all the regulators and all the legal specialists who were trying to figure out, because there were no laws about stable coins or any crypto in the first place, we're trying to put all the tokens, we were calling it digital assets, into 3 separate categories. And it was rather simple. And I guess all the laws that are now being so widely discussed, like MiCA and the Genius Act, actually follow this idea very neatly. And that is dividing the digital assets into securities that are financial instruments. And this is the category you don't want to be in if you're dealing with this sort of digital assets, because you have to be regulated a lot, unless you really want to deal with financial instruments. And then there is the second part. This is utility tokens. And this is like the majority of any crypto digital assets, where the token has the actual utility, something useful you can be doing with that. And then there is this third, smaller, but now so rapidly growing category of payment tokens. And believe it or not, but in 2017, the first example of payment token was always Bitcoin. Surprisingly now, because we don't usually see using Bitcoin for payments in 2025. And of course, now
Well, it's still happening, Nastya. And for me, it's like paying by gold. You're paying by gold. You can't do that, but it looks really, really strange to me.
But anyway, when we are talking about stable coins and payment coins, of course, the first thing that comes to mind is coins that are pegged into fiat currency, usually US dollar, or less often euro. I guess Japan is trying to issue some first yen-related token. So this happens a lot with fiat currency. And for stable coins, the idea behind stable coins is to maintain the price of this token depending on an actual asset. So European regulator, I'm sorry if I'm yapping too much, you can stop me.
No worries. It's really interesting to hear, guys. If you wish to change the subject, please let us know, because it's kind of a democracy here. So it's the first webinar, so we're trying to be, first of all, super friendly to all our guests, and plus we would like to give some value. And what Nastya is telling right now, I think is pretty interesting. So thank you very much.
Okay, so I just wanted to describe a little bit more about stablecoins and the point of view of European regulation that is currently in force. And it doesn't really use the word stablecoin, but everyone understands that the 2 types of digital assets that the law is referring to are considered to be stablecoins, because these are ARTs, that are asset reference tokens. That is a token that is pegged to usually a basket of assets, and there can be euro, dollars, gold, like anything that has real world value. And then there are e-money tokens, and this is the thing that we're usually thinking about when we're talking about stablecoins. These are the digital assets that are pegged to one single fiat currency, and usually it's USD or euro.
Yeah, exactly. Thank you, Nasty, very much. Because yes, it was so obvious for all of us, but still, I think only few of us really knows the background behind it. And thank you very much for clarifying it. And yes, definitely, the stables are actually backed to regular currencies, so that's why it is so popular, and that is why it's so easy to use, because it's just one-to-one to dollars or to euros. In majority of cases, it's dollars, I would say. And let me share with you one more very interesting slide, which is actually, I think, it's actually blowing my mind, to be honest. So just imagine how big the stable coins are become recently during the last 12 months, sorry, only 1 year. So it's the comparison between the transaction volumes in Visas, MasterCard, PayPal, and stablecoins. And it's 46 trillion transactions during last 12 months in comparison to 16 trillion of Visa. So even now, during this year, it's already overgrow the Visa, and the potential is absolutely tremendous for in terms of the business, in terms of the everyday use, and basically, yes, it's changing the whole environment and the whole market of the goods and services. So, Nastya, or Stanislav, would you like to
just
to add something
maybe
here?
my 2 cents on that. I think it's worth to mention the nature of the stablecoins transactions and the significant share of businesses and institutions actually transacting in stablecoins. So it's not some random people in third world countries just sending money to each other. It's actually a mature mature rails, let's say, for accepting payments. I recently came across the article that Coinbase partnered with Shopify, and more and more merchants will accept and hold stable coins as a mean of payments and like mean of cash, let's say, in some regards. So
Yeah, to develop on that, I worked as an investment lawyer for quite some time now, and we deal with what I call on-chain investments. So they're like investments into projects from institutional investors, like huge funds, American, European funds, and they're giving their money not in fiat currency, not in USD, not in euro. They're giving it in USDC and USDT. And sometimes these are sums of not just millions of dollars, but like dozens of millions of dollars. So these are actually very, very much institutional players that are dealing in stablecoins a lot.
Yes, thank you guys for adding up value. So yes, it's really interesting that the market is growing so fast. So let's dive deeper into some more interesting data, and we will discuss about it's pretty interesting that this year was the year of institutional adoption. First of all, due to ETFs, which was issued by major players. So basically, we see here several very big news which was released during the 2025, and definitely it's the year of when everything has changed a lot. Started from Robinhood, who tokenized stocks, Circle, BlackRock, Fidelity, etc. All these guys, and of course Stripe, which actually bought Bridge for $1 billion, and Revolut and all other guys are actually huge players on the market who are currently really deep into this field. And it's actually shows where the market is moving to. Of course, they are the first guys. I mean, the most advanced, let's say, users, and the others will follow. And that's just the trend which is actually building the momentum which is currently happening. And definitely it will change everything. Stanislav, Nastya, would you like to add something here?
Yeah, for me, actually, 2025 is like a new turning point for stable coins at the very least. Again, as a lawyer, I'm seeing this from the regulation standpoint because we have two huge piece of legislation, MiCA, which came into force last year, but it still has its very long-lasting effect because it actually regulates and says that stable coins, in what I described as stable coins, can actually be used in the European Union. What are the framework, the legal framework for issuance of such stable coins? And at the same time, in July 2025, we got a huge news. There's the Genius Act that was enforced in the United States. It's still not completely enforced because there are a lot of regulations that has to follow.
Still the direction.
Yeah, but still it's huge because it's fully dedicated to stable coins, and it's the first law in the United States that is actually dealing with digital assets. So for me, again, all of these huge players actually pouring their money on this, like Stripe buying Bridge, which means a bridge and which allows users to issue their own stable coins. So there are a lot of actual platforms that allow you to do that because you have a lot of infrastructure behind issuing a stable coin. It's not an easy task. And again, you have to be licensed now in a few jurisdictions. So a lot of big players, they're creating these platforms that allow their B2B users to issue their own stable coins. For me, it's a sign that we're at the tipping point when the stable coins are becoming just a new norm, where you have to somehow adopt them in your business. And for average people, you sort of have to have this card that lets you pay with your USDC that you're keeping without even exchanging to fiat.
I just wanted to add maybe that some of these players, they are focused more on merchants and retail users, but some of them like Stripe or PayPal or networks like MasterCard, they kind of feel this tailwind from AI and all these agent-to-agent payments, and it's just a new battlefield, and they just have this fear of missing out.
Oh man, it's really freaking me out, to be honest.
They adapt this, all technologies, all these X402, it's a different kind of sort
different
of
dimension, absolutely.
But yeah, it's also important that we have AI as a boost, let's say, for stablecoins adoption, and crypto is a forefront.
It's a very interesting topic because I think, yes, with the boost of AI, because previously it was very hard to do the payments on your behalf with the AI, because it's really hard to do this 3DS, etc., and it's also not really secure. But with the use of crypto and with the use of stable coins, it becomes more and more easier and still safe. So that's a huge portion of the businesses which will actually be built within the next few years, definitely. Thank you very much, Stanislav, for highlighting it. I haven't thought about it. I mean, I haven't thought about adding it here in the presentation, but it's an amazing idea for all of you guys of how the stable coins can be utilized. And I would like to highlight a few more things here. It's just the comparison. Of course, it's comparison of US, but it's basically in Eurozone, in the United States. They're pretty similar. So it's just showing the differences between the credit card payments and the crypto or stablecoin payments. So first of all, the stablecoins are much faster. Usually it takes let's say a few minutes to settle, and the transaction costs are much lower because it's only usually it just takes the gas fees, which is just utilizes the possibility to do the payments within the infrastructure, but it's usually just within a few cents or dollars, and it doesn't matter how much you pay. It could be $1 million, but you will just pay, let's say, 50 cents for the transaction, and that's it. And the most interesting part that it will come through within like few minutes, no matter where you are. Especially, it's super crucial if it is being made between different countries, because currently, if you would like to pay cross-border, it could take you up to a week easily. But with the stable coins, it will just be the same few minutes with the instant settlements, with no fraud. And it's also an interesting point that the actual crypto and stables initially perceived as something unclear, fraud or whatever. But in reality, the blockchain is super transparent. It shows us everything. It actually shows all the history of the transaction beforehand, and will show where the money will flow into. In these cases, it's becoming more transparent than the fiat currencies. And in cases of the fraud of, let's say, crime, it's much more transparent. And using the KYT services as we're using it, we can see immediately if the money is coming from some, let's say, risky assets or fraudsters or criminals, whatever. We see it immediately. And that's actually changing the whole game. Plus, of course, yeah, that's mainly my speech. Guys, would you like to add something additionally?
Well, one of the things that you, again, why a lot of our clients are using crypto for their business transactions is there is a lot of hustle in opening a fiat bank account. Sometimes you have to really shop around to see who will accept you in the first place. And the cost of maintaining a bank account can be high. It's way easier with opening a wallet. There are fewer rejections. I guess there is less KYC, KYB requirements in that regard. At the same time, there are actually AML and KYC requirements for crypto, and in stablecoin transactions, of course, it is a regulated area, as I've told many times. It's not some wild west when everyone does whatever they want to. They actually have to be a lot of checks, and as Serge mentioned, KYT, which is know your transaction sort of thing, when you have to actually know where the money comes from. So all the CASP, the crypto asset service providers, are obligated companies under AML regulations, European directives, and so on. So it is really getting harder and harder to do crime on chain. And I'm just hoping once the stablecoin are fully institutionalized, and I guess the crime rate will be the same as with any fiat currency. And I guess we're just heading that way.
Yeah, I would like to add that I personally had experience as CFO that we had a problem with payment for almost $500,000. It stuck somewhere with the correspondent bank with intermediary. And it took me almost 2 months just to recover this amount and kind of figure out what happened. With crypto, you just don't have these intermediaries, and you can send stablecoins directly, let's say, peer-to-peer to your counterparty. And that's one amazing feature. And another one, it's more sort of visionary, but there are new neobanks, like DEO banks, as they call themselves, built completely on-chain. And we all remember the Silicon Valley Bank story that kind of no one expected that flop. And with new banks built on chain, you actually can expect the full transparency from kind of banking infrastructure. You can go to Duna or whatever they use and check what balances do they have. And that's, for me, is exciting. I mean, I love this feature of transparency.
Stanislav, thank you for adding. Yes, this is the great difference between the centralized finances with the decentralized finances. It's, first of all, of course, the full transparency. So actually, blockchains gives us full pictures, and you cannot hide it. One more thing I really like about the stable coins and crypto, and actually all our merchants like it as well, is there is no chargebacks. Because basically, technologically wise, it is impossible to do the chargebacks. So if you would like to return money to your users, you will do it, but that's your decision. It's not the decision of the users. And of course, we do know that there is a lot of fraud happening behind the chargebacks, and it's billions of dollars which merchants are losing every single year. But with the stable coins or with the crypto, it's just impossible, just because the blockchain doesn't work like this. And that's another really good point for using these stable coins as well. Nastya, would you like to add something?
Well, I have to mention that there are being developed blockchains that actually allow you not to see all of the transactions. Obviously, a lot of people dislike that about blockchain, that you can actually see everyone's like wallet, what is coming in, what is coming out. And they are a technology that allows to like hide that. I wouldn't say it's widely accepted. We're going to have to see if it's going to be widely accepted. I don't think it's going to be a huge part of the market. But yeah, that is something that, can be achievable if you really want to, concerned about your privacy. Something.
I think within the next few years, it actually be super transparent. Even though I'm also a great believer of DeFi and actual anonymizing, because this was the initial idea, yes, to be behind the scenes, behind the let's say governments, etc. But in reality, right now, it's even more transparent than the regular currency. So I think this pendulum moves to regulated part. And it's what's happening, and there is good points and bad points about it. From the let's say customer perspective and from the merchant perspective, I think it's more pluses than minuses, because more transparency, less fraud, everything is clear, everything is regulated. Well, of course, it's a bit too hard on the right. It will swing backwards at some point, I believe, in this, and that's where the DeFi will be like booming and blooming. Yeah, Stanislav, would you like to add something?
I just wanted maybe to ask you, Serge, about the like subscriptions. You mentioned chargebacks, and it triggered me like to ask about subscriptions. I don't know if it's actually possible to.
It is possible.
Okay,
there are a few limitations with the subscriptions, because only few blockchains actually do support it, and it's not supported by the full scale. Plus, it can be done only with the self-custody wallets, as a lot of users are actually using the centralized exchange to pay for the goods or for the services. That cannot be done with the subscription. So we will be definitely adding the subscription, because actually the first initial stage of our startup was thinking about the subscription. That's where we was moving to, but at that period of time it wasn't yet there, I would say. Now we're moving there, and I do believe in the subscription model and the subscription economy, because it's also growing very fast, because we all like SaaSes, which is definitely super easy and super useful. So definitely subscription would be growing. Unfortunately, they're not possible to do in for example, Bitcoin, because in Bitcoin there is no smart contracts, so it cannot be done at all. Litecoin, Dogecoin, so all the forks of the Bitcoin couldn't support it. But still, in the majority of EVM-based, Ethereum-based blockchains, it can be done pretty easily. Yeah.
Cool.
Yeah. So I would like to highlight a few verticals with whom we're currently working with as an examples of how the market is growing, where it's moving to. So first of all, of course, affiliate networks. It's one of the spheres where the stable coins and crypto was used very long ago, and it's actually the adoption there is pretty huge, because there is the buyers and there is the I would say the affiliate guys are actually what they do. They have kind of the bridge between the buyers and the sellers. So the buyers who would like to buy the traffic, and the sellers who actually can bring this traffic. So they aggregate both. So they have incoming flows and outgoing flows. And there is a lot of international payments, because the guys who are actually bring the traffic are usually across the world. So and we see like thousands of transactions per day being made to these partners through our platform. So I would say that it's like 30 to 60 in terms of the percentages. 30 is incoming, stablecoins transaction and 70-60% of outgoing. That's about affiliates. Hosting services is actually the regular hosting providers who was also early in the crypto and stablecoins. And I would say it's roughly around 20 to 30%. It might be this big amount of volumes coming through stablecoins. As per freelance platforms, I think it's pretty obvious because there is a lot of digital nomads nowadays globally. There is a lot of we're working online, so there is a lot of employees around the globe, and the easiest way to pay them is actually the stable coins, definitely. Because if we're paying to, let's say, to South Africa, or if you're paying to LATAM or whatever, to pay via regular payment methods, it would be a huge headache. Especially if we have like hundreds or thousands of transactions, I would say it's even impossible to pay. If it is not the stable coins or crypto, you couldn't do that easy way. And of course, the interesting part here is the fintechs. For me, I think it was the changing point because when I've been contacted by several fintechs partners, and we was on the call, and the guy actually told me that he doesn't believe in the crypto and thinks that's scam, but still the customers are asking. For me, that's what the turning point, when even they do not believe that, but the customers are asking. It means that the market is actually there, and already there is a lot of customers who are actually willing to do it. And it's, for me, it was the absolutely changing point. And it's actually happened this year. And just a year ago, when I was speaking about our project about the stable coins, a lot of people was telling me like, what the hell, what is that? But now everything's changing. And it's just, it's just 1 year. 1 year passed, and it's so huge changes happening around the globe. So I do really recommend everybody considering, if they're not still using these stable coins, to think twice about it. Nastya, Stanislav, would you like to add something here?
I have more of a question. In your practice, Serge, platforms that are selling tickets, be it concert tickets or like flight tickets, is it a good use case for stablecoins?
Absolutely. The only one different thing which is not good here is the hotels, especially if it is the booked preliminary and haven't been paid. In these cases, the crypto is not working perfectly because you can't book the money and not pay it using the stable coins or crypto. Is just you pay or you're not. So in these cases, it's just a bit different type of use, but still it can be used. Especially, and again, why it is becoming so popular? Because it's way cheaper. It's the transaction cost is so small. The speed of transaction and the settlement speed is incredible. I mean, that's why it's booming, because it's so easy and so fast.
Yeah, actually, another thing that comes into my mind from just even personal experience, there are actually countries where your average bank card doesn't really allow you to use it outside the country of issuance. This is the case for Brazil, for instance.
Or
have
they
to have
will
a
charge
credit card,
10%.
and not really everyone gets to get a credit card because you have to have a special credit score and so on. It's like a complicated matter to have a card that would actually work in another country. And if you want to purchase something to be even delivered into Brazil, you have to use someone else's card if you don't have one. And it's complicated. If you can use any stable coin to pay for your purchase, to pay for your flight ticket, to pay for your hotel, that's an amazing advantage.
100%, Nastya. I would also add that in this kind of countries, because, well, I'm living in Turkey for 3 years, like right now moving to the Europe, and still even here, if I have the business, banking card in the Turkey, and I would like to pay for any services outside the Turkey, let's say in US dollars, I'll pay extra 10%.
Okay.
That's it. And every time I pay, I cry. Really, literally, like, why the hell should I pay 10 extra percent? And that's just a few use cases, of course. And when it's just a stable coins, it's one-to-one. It doesn't really matter where you are. So that's also the good possibilities for unbanking population. unbanked nation with a low, let's say there is the banking or unbanked population, where the people couldn't even open a bank account due to some regulation, these kind of things. So the actual stablecoins and crypto allow them to be involved in the ecosystem, on the financial ecosystem global, and to pay wherever they would like to. So yeah, definitely, that's kind of freedom people would like to have.
Yeah, I just wanted to add maybe another case I came across recently. I had a talk with a guy from South Africa. He's in logistics business, and he struggled to pay to China. So China, like recently, they kind of started, selling more and more to the continent, to the African continent. And with this growing, tariffs, US, China, I mean, the cost of logistics is just growing. So if you can save something on these payments in logistics space, I think stablecoins are also super useful.
The only one thing here is the current sanctions. That's, I would say that the logistics is among the industries which are highly regulated and could be like not the high risk but risky, which would require additional ML checks, compliance checks, etc. But still, yes, it could be used. I would like to talk about one more interesting thing, guys, with you, about the DeFi and why it is also so sexy. Because basically, DeFi give us additional benefits and the possibilities which majority of people could even not think of. And Nastya, Stanislav, I would like you to start with this point, and then we will dive deeper into it.
Yeah, maybe I can start. I mean, I had this pain of, absence of any meaningful offers for overnight deposits, for instance, for a Cyprus company, let's say. It's just non-existent in Europe. And it's just a struggle for any CFO to find the right way to utilize your, let's say, idle cash, because you still have something. You keep it till the next payroll date, and you want it to work. And for me, DeFi is the answer. I mean, you can use your stablecoin as a yield-bearing asset itself. So it's still stable. It's still the same thing. It's still liquid. It doesn't mean you have to park it for like 1 year with some commitments. You can do it whenever you want and get your, let's say, 8% easily. And then there are a variety of, cases on how to get maybe more, or how to, put into work your stable coin, which you prefer more. Like there are plenty of them. But this feature for me is just like amazing itself. And I mean, full stop. You can.
Yes, thank you, Stanislav. Yes, exactly. That's what I was thinking about. And Nastya, would you like to add?
Yeah, I mean, it's a very cool opportunity because you don't really have to exchange your stable coins into anything. You don't have to buy Bitcoin and wait until it grows in price. Actually, you can have a yield on a stable coin, and you can have it in a pretty conservative way. Also, you can put it into staking, you can put it into liquidity pool, and just earn. Yes, the margin would not be so high as in like more risky strategies, but still it is something that you can do. And you, again, the cool thing that you don't have to wait for like a year, like with a banking deposit, where if you take it out early, you're just lose of your earn. This is not happening with stablecoin. You get what you get, and if you want to take it out, sometimes it can take some time, but again, not as much as with any banking traditional system.
Yeah, absolutely. Actually, it depends on the staking, or it depends on the system. But basically, yes, that's one of the really interesting use cases. So you hold your money in the stable coins, and you actually can earn with it, like as Nastya and Stanislav mentioned. You can just put it in the staking or put it into liquidity pool. And actually, there is a pools where you can withdraw almost immediately So if you need it, you can withdraw it immediately, and you will not lose any interest in rates which you earned. So that's the huge difference between the DeFi and CeFi. I mean, decentralized finances and centralized finances, that you can actually control it. And interestingly, that the percentage rates starting from let's say 3% to 10%, and that's a very low risk strategies, which means that you can actually earn with your USDTs now more than in any banking regular banks, and without freezing your money, without any risks, without any fraud. So it's super easy and super fast and super convenient, actually.
Yeah, that's true. You promoted into lending protocols. I mean, there is like a lot, the DeFi instruments that you can use to get your earn.
Nastya, I just realized that maybe we should just step a bit back and just let the guys know what's DeFi. What the hell is DeFi? So, just in the few words, let's describe it. Can you start?
Well, there is centralized and decentralized, basically, financial systems. The centralized is where you have one single entity that controls every transaction, like centralized exchange. If we're talking about blockchain, centralized exchange, you have one like Binance, Bygate, whatever, that is actually in charge of all of the transactions within that centralized system. And there is DeFi, which is decentralized, which means that there are only users that are transacting between each other, amongst each other, but there is no one single entity that is keeping any of the finances. So that's basically it.
Yeah. I would like to add here a few additional layers. The centralized finance is actually like user, and between them there is an entity, which usually banks, whoever they are, who would like to earn money, who would like to there is a bureaucracy inside, so there is a lot of human factor inside. But with the DeFi, there is only two human beings, and between them there is a smart contract, which is actually super transparent. You can know everything within it initially, and actually it's just it kind of escrow agent between you two parties, and signing the contract. You know exactly what will happen, and actually there is no way one person or another will cheat. And I think that's the huge game changer, because it actually changes everything. It throws away this intermediary and human factor from it, and allow you to do whatever you would like to. If you would like to for example, to lend or to borrow money, there is no way to cheat the system because it's fully decentralized. Stanislav, would you like to add something here?
Yeah, just maybe partially repeat your take on that. That like when we have no intermediary, we are overall as an ecosystem are more effective, and we get better interest because of that. In a nutshell, banking is some people depositing money, others are like going to the bank to borrow money, and in DeFi it's just simplified, relying on protocols. It's simplified to a smart contract, and in DeFi, why like the question to ask maybe is why the yield is different. I mean, we mentioned 5% here, 15% there. That's because DeFi is sort of self-organized financial system where you can see curated pools where rules are defined in a way that if you bring as a deposit something which is more volatile, like Ethereum may be more volatile than something else, then the like yield on that asset which you brought is different, and the interest of borrowing is different. Like, but still, it's not because of the inefficiency of the protocol or bank itself. How do they score you as a borrower? It's just because of the nature of the asset which was brought to the pool.
Absolutely. So yeah, I'm a true believer in the DeFi and actually in stablecoins, because the simplicity of the usage. Actually, there is, I would say, there is only one problem here. That's there is a pretty big still gap between the Web2 users and Web3 users. So they have to learn some new skills, which initially is really scary to see these crazy numbers of the wallets. Yeah, it's like you cannot remember it. People get used to remember these numbers, which is completely impossible in the blockchain. So still there is a gap, yes, and definitely it will take some time. But as soon as you try it, it's almost impossible to get away from it. I mean, it's so simple, it's so fast.
I mean, UI is getting better, definitely. Getting better, very like user friendly. I guess the services are now dropping all these crypto specific words and buzzwords that are very difficult to understand for someone in the bubble, and for any Web2 user, they just like doesn't make sense. But
absolutely.
It's getting easier. I mean, it's not that scary, I guess, at this point.
Still, centralized exchange is pretty hard, you know. And when my friends are trying to do anything in it, it's damn headache. You know, you have to record the full I would say step-by-step guide of how to do that, because the user interface is crazy. People get used to it. We get used to it, but if you just look from the perspective of the customer who haven't tried it, it's crazy, and it's really happening. The new projects are trying to make it easier. We are trying to make it easier, more Web2 focused, so no headache of how to put on the balance, you know, for accounting parties, convert to on the fly, etc. So yes, that's what's happening currently with the market. So we're trying to make it simpler for the users, for the merchants, to pay, to cash out, to convert to the fiat, to settle to the bank accounts, and do it like frictionless. So I think that's where the market is moving, and definitely it's and also that's why it's growing so fast.
True.
I see we have a question in the chat. Maybe we can address it now.
Yeah, sure. With the recent increase in stablecoin adoption, have you noticed any uptick in adoption of smart contracts in traditional trade finance markets? It seems to be the industry that would benefit the most, but it's still lagging behind. That's a very good question, John. I believe yes, it's definitely be one of the parts of the market which will be growing super fast, and definitely traditional finance markets are meant to be in the smart contracts, from my perspective, because it's where a lot of unclarity and a lot of people do not really understand what stands behind. But with the smart contracts, it becomes super transparent, which gives more trust from the customers. It also reduces the cost because there is no intermediaries. Once again, yeah. So that's why the percentages, the rates will be super cheap, because there is no huge enterprise behind it with the like 10 layers of management who have to have salaries, etc. So that means the overall the prices on the market will go down, which is definitely a great idea. Nastya, Stanislav, would you like to add something here to this question?
Yeah, I see a comment from Roger that Africa, Asia Pacific, and LATAM seem to enjoy fast transfers at low cost. That's true. Like, I'm a resident of Latin America, and I can say that adoption is specifically in Brazil and Argentina and Colombia of crypto and stable coins is huge. For markets that face volatility like Argentina, it's a nice getaway from their own unstable currency. For countries like Brazil, with again, with the problems sometimes with big banking system, there are certain restrictions on foreign investments into country and so on. Adoption of crypto and real also can be quite volatile at times. It is a very good way to actually be a part of the worldwide financial system. And with all this like tokenized stock and everything that's coming into with the tokenized financial instruments, I think it would be an amazing way for people who are unbanked, as you've mentioned, Serge, or partially banked, to have access to these instruments. Because when you live in Europe or the United States, you see through the point of view of a person in the developed country who already has all the access to all of these markets, but there is a lot of population on this planet who would like to earn with their own money, but they don't have this option because they cannot actually access other countries' markets and stock and so on. So yeah, I think for any developing country or so-called developing country, that's a huge opportunity here.
Thank you, Nastya. Stanislav,
I would
would you
just
like to
add
say something?
that, like, trade finance means it's a money market, and when you just move massive amounts of money, and you can save even like BP like on something, it's a lot. It's a huge thing. So that's why all players in Forex, they like quickly realized stablecoins is a killer feature. And I remember that Wise, the TransferWise, like currently Wise, they started playing with stablecoins like years and years before it became a mainstream. And another thing I wanted to mention, because Nastya spotted this tokenization, is the second growing category in crypto. I think it's a private credit. It's just tokenized private credits from institutional banks and those who are interested in providing this liquidity. And it's also growing like tremendously. So we're gonna see more and more like institutions once again trying to to build on smart contracts and blockchain overall.
100%. I would like to also to add here that, I see that John is writing. Guys, please ask your questions. Would be happy to answer them and to discuss with you what's currently happening, because definitely we're living in a new, interesting world, and it changes everything. So what I also would like to add that actually, I was sure that it would be growing in the third world countries, but interestingly enough, it's actually growing hugely within the Eurozone as well. Even though there is a SEPA, there is a fast ways to pay, still the crypto is growing super fast. And again, because there is the problems in receiving money between the countries and sending huge amounts of money, especially if you're paying the salaries for 100 your employees who are living worldwide. Using any fiat system is almost impossible. I mean, you will face a lot of problems, plus it will cost you crazy amount of money. So that's also a good ways of reducing the costs. And well, it will change the system in the end. I really hope so, and to make it more transparent, more cheaper for the end customers. I see that Roger Paul asked additional questions. What are the most interesting recent use cases of stablecoin adoption? For which industry and which corridors? That's a good question. I think because there is so many use cases that I even do not know where to begin with. So it's of course one of the fastest growing is the payout system. I mean the salaries, all these payouts for the partners, for affiliates, for whoever they are. If there is a lot of payouts, it is one of the fastest growing segment because it's just the reduction of cost by 3, by 5 at least. So that's the most simple way of using the stable coins to pay out for your partners globally, especially if there is a lot of like hundreds of payments. It will just reduce your costs at least by 3. At least. So in talking in the corridors, of course, in majority of cases, it's the stable coins, USDTs, USDCs in different blockchains. And again, if we talk about the corridors, if you mean fiat corridors, usually it's euro or dollars. What are the yeah. I thought that the new question began. Yeah, you are welcome. Nastya, Stanislav, would you like to add something?
Like for me, I think remittance is the where we started, and that's why you see that Western Union, they recently announced they are also into stable coins now. Like it took them 169 years to realize it's worth it. But Regarding the corridors, I would say LATAM. It's because of the volatility of the internal currencies. And Argentina, I have so many friends there. They just rely on stables, and the use case of peer-to-peer lending built on chain, for me, it's one of the most appealing. Just because people just deal with people, and that's it.
Great point, Stanislav. Thank you very much. Nastya, would you like to add something?
Yeah, agreed. But again, to echo, in Latin America, it's Argentina, understandably high volatile, and not only Argentina, not only Latin America, but all of the developing countries. A lot of people rely on stable coins. In Africa, for instance, they're not just unbanked population. There is population that doesn't have access to the internet, lots of them. And one of the solutions is actually to receive payments from the population, but via text messages. It's like a widely popular way to pay in Africa, just by sending text messages. And that is where stable coins also come into play. Also, you can send stable coins just by sending text messages. So I think this is like the type of digital asset that in any sort of country, underdeveloped, developing, developed countries, anyone can find a plus, and anyone can find a use case for that.
I just looking onto some interesting numbers. For example, in LATAM, it's 71% use stable coins for cross-border payment. 71%. Asia Pacific, 56 percentages of institutions already live with stable coins, way ahead of other regions. Singapore processed more than 1 billion of stablecoin methods in 2024, and more and more and more. So it's actually booming everywhere. And yeah, it does make sense because it's so super easy, super simple to use.
Yeah.
So, guys, we are wrapping up. Thank you very much for. Okay, QA and compliance we'll skip for today because it's a bit hard.
It's another hour.
Yeah. Thank you very much for being with us. That was the first webinar about the stables and the adoptions, and definitely we will be talking more about it in the future. We'll show you some interesting things. Yeah, Simran, thanks for yeah, thank you very much. Thank you very much, guys, and thank you, Stanislav and Nastya, for being co-host with me. It's been a great pleasure, and have a wonderful evening, day, or night, or morning, depending on your time zones. So thank you very much for coming, and have a wonderful day.
Thanks,
Bye,
everybody.
everybody.
Bye.
Bye.